There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Midweek software strategy session. My name is Steve Vettel. Today is the 6th of June, approximately 10 after 1 p.m., which is when I try to get these things started. So I am the guy most known as the AP risk management. It's the role I try to play. I play this damn role for a living every day. So let's start off with the Forex Factor. We'll make this one quite quick. Yesterday was a holiday for a lunch. A lot of different foreign countries. Foreign being overseas in Euroland, because we are broadcasting from the U.S. here, right? So do keep in mind that as far as I care, and you should care, anything that's a red folder could be related to obviously the currency you trade within your own country or the pairs, majors, minors, or crosses that you trade. Do keep in mind that ECB press conference is Thursday at 8:30 a.m. Do also note that, let's see, I guess we're somewhat synced up here. This is in Eastern time, New York time here. So always be sure to have yours set for whatever, but press conference. And then obviously the most important thing now, which does take center stage over our employment report, is this core CPI. So you can always click on these boxes, see kind of where they are. And more than likely it is going to be heated. No surprise there. So what I did not show on the Saturday chat, let's go ahead and take a look at it now. I always like to look, and I just happen to have this thing bookmarked for the 5-minute chart, because when I'm out traveling on the road, sometimes it's quicker to open this and start tearing into opening the whole trading view app and trying to spin it around on my phone, get it looking right. A lot of times it's just good to just set this as a quick hit. This looks like we had a pretty decent rally off of the open. I don't know if there's news that broke. I've been in client meetings, so I can't tell you what that was. But one thing I can say is that this 4080 area, for those who trade anything S&P based, this 4080 area has really been holding. So let's take a look though of the most important. That's all and daily. I'm actually going to look at weekly first, so I'm not going to get too far into the other stuff. I just want you to kind of see that we've taken a break on the declines in the actual price of the credit markets, credit being bonds, an important part of, in my opinion, the overall risk management understanding from a macro perspective of all markets that trade. So they affect how currencies trade. They affect obviously everything from imports to exports to, just along with currencies, trade imbalances, which could certainly affect currencies. I have a piece up on the Telegram channel that is like a really cool Forex cheat sheet. I think just studying that alone will probably give you a shot at passing, I don't know, 50 to 60% of the material in most macroeconomics classes in college, right? Or as they say overseas, university. So let's go into an analysis here. So we've pulled back, no surprise. Each of these candles represent a single week. Just double check one thing. Yes. All right. So Just focusing on currencies here, dollar first. I want you guys to kind of see the big picture as we sort of rip through this. This is where one should start to form their thesis, and then you can drill down into what you expect to happen over any given period of time. So I always start off with the US dollar, just wanting to see where it moved. We've came a long way. You know, this was one of the first times on a weekly chart, and I'll double check that we hit a number of standard deviations. So anytime you have sort of a huge move up or down on a larger time frame that does crash through a Bollinger Band, Keltner channels, any kind of sort of measure of stretchness on the chart, you're almost always in developed mean reverting markets going to have a snapback. So keep that in mind. But, you know, as one of the best lines, I've probably said this at least 100 times at Auvoria, markets can be irrational a heck of a lot longer than you can be solvent. So just looking at how all that plays out over any period of time is very important. So the US dollar up's taking a break for now what? We're in the fourth week of taking a break. It's probably in the midst of establishing what could be quite a long period of time in this upper zone that we're in. We'll take a deeper dive in the other charts, but my seems like ever evolving theory and just trying to build a thesis here is that we're going to trade inside a tighter range. Doesn't mean there's opportunity or mean there's not. It's just you want to try and set some parameters, what type of zone or range you're going to be in. Then you can drill down into charts all the way down to heck a 5 minute if you want. Then you can begin to look to see what does the price action show us, right? But the digestion of any move up or down, especially over a longer period of time, the digestion could be quite lengthy. Could take the whole summer. And if that in fact's the case, there's opportunities to trade both up and down as it begins to build this base. The exact opposite takes place with the euro. Probably taking a break, probably building a little bit of a base, right? Yen, who knows where the hell this thing's going. It took a break and now it's continuing its descent. This is a pretty epic move. Actually, I'm going to show the regular ones, but this is a pretty epic move in the grand scheme of long-termness. So if we take a look at over, heck, since 1999, right? We can probably, in terms of months, you know, granted this was, you know, the whole crisis of declines and heck, I can't even tell you why it went up throughout because this was an absolute wrecked period of time. And I guess the argument was, well, you know, the yen looked better than probably a bunch of other currencies, including the dollar during this period of time, because this was a, you know, major correction in this country, especially in real estate stocks. I mean, almost everything got damn near cut between a third of its value to a half, depending on the asset class, right? Something certainly could happen again. Makes you wonder if we'll see the Japanese yen actually rally if that does in fact take place. But looking at, let me just double check one thing here, make sure we're. OBS Studio is sophisticated, but sometimes this thing just okay. All right, I'm gonna get too detailed on this. Let's make the screen bigger. All right, it's back to the grand picture here. We've taken a break in almost everything with the exception of the yen. As you can see, we're stuck in the force. These are all currencies that are just versus, but looking at, actually, let me just go to the charts and rather just show this, just so you can see this is the broader market here, S&P. Tight range we're forming. Seems like somebody's stepping in to support that. So for those of you trading the futures or any kind of index or ETF based, or certainly anything on the MT4 platform that goes after US indices, do note that it looks to me like these three candle wicks down at the bottom. Somebody's stepping in to support this market. There could be some accumulation going on, right? The only problem with that, if you're catching on by looking below, which I haven't pointed at yet, I'm testing you guys, is that it's coming on declining volume, right? Doesn't mean there can't be accumulation going on, but, you know, technically I don't know, summer solstice, if you will, started like a week ago, right? And a lot of people just scram, at least here in the U.S., because they've been stuck in their houses in some cases for 2 years, depending on which Third Reich state you live in. Hint, hint. But welcome to the outdoors. So I would expect this to continue to balance. Let's go to the DXY. Doing a quick and dirty hit on this today. We talked a lot about this Saturday. I do always recommend you go back and listen to my Saturday presentations. We're up on both Vimeo and YouTube, sort of like my cast that I do on Saturdays, which is typically a lot more lengthy and in-depth. Sometimes these Tuesdays, if I can make it to them, are quick hits. Today. That's all I pretty much want to say in this. Here's Euro. Still think we got some. Where are we at daily? Daily, we still got some more time building in here. I think there's probably opportunities to pin off of both of these range buys, get down to this 1.06 area, bottom of the range. Remember, it's just a general zone. It's not some finite number, right? To the top of this range, 1.08. Almost a perfect century mark there. It's top of the range. Notice that's where we broke from heavy here, right? This was that initial ascent of the US dollar into that 105 zone, which came right here. Consequently, the opposite side of that, same thing. Keep in mind, these are not perfect inversely correlated, sort of doppelgangers of each other. There's other components to the DXY. Let's see what else we got here. All right, so I had to answer an email right away. Take a look at the Euro, GBP. I do get questions about that. Daily chart, still in that range. Let's take a look at next question I got, which is the coinage. So tight range ever since our drop, which we fully anticipated for those that have been participating in my coinage lambasting. And it's not that I just dislike the coinage, I dislike losing money. I dislike when anybody that is a student or any kind of follower, subscriber, client, whatever, loses money because of poor advice elsewhere. So I try to remedy those. So it's kind of noisy. I prefer to look at this from a weekly perspective just because there's so much noise on this chart. Let's see if we can reset, and then we'll show you the big picture here. So when you break out from a long base, that almost always is an area of support. So this dotted line you can see, which goes all the way over to just right under 14,000 per coin. The more than likely that's the next area we're headed to. So I hate to say it, especially if you're long from up there around 65,000. But if you're still long up there from right near the highs, you haven't been listening to anything I've been saying over the last 6 months about risk management. So, and just remember, for everybody that uses the really, really ridiculous excuse, which you would be fired immediately on Wall Street for, of, oh, well, it's long term. I'm just going to hold it and it'll come back. Okay. It may come back, and that certainly could be a true statement. The question is, how long would it take, right? So for somebody that's very young that bought at the top, now they're getting absolutely clobbered, basically have half their money left. A lot of them are dismayed and don't have the understanding of diversification or risk management, and they've bailed or they're getting ready to, or, you know, especially those that have watched absolutely millions of dollars in net worth evaporate, right? In a risk off situation, anything that is new, or I like to call it the log cabin phase, right? With the settlers that just settled many countries, right? It's called the log cabin phase. That is the first thing to get thrown out of the window when risk off takes place. And that's why you can see these market for NFTs is completely evaporated. So it's been painful for some, an important lesson for those that look at it that way. But at the same time, critical that you understand how it can affect long-term prices. If we do crash down to this 14,000-ish area, there will be probably a considerably, probably a full pukage. Question is, how long does it take us down at that level? Which, by the way, I would be interested in. So just so you know, because you can see where and this probably isn't the best area, but somewhere in this 12, as you can see, maybe this isn't the easiest to see. Just expand it out. You can see right about here. Sometimes I like to look at the tops of the candles, not necessarily the wick, for top line support. But you can see right here, we've had a very, very long base. Even though it's sloppy, that's okay because the length of it is extensive, right? Here's our breakout point right here. Right in this 11-ish, 12-ish area. It's a broad area of almost 1,000. But that is essentially your breakout. Doesn't necessarily mean that it's going to absolutely rip to that area. But I can tell you through this period of time, now, yes, these are weekly candles, there probably is a whole bunch of missing notches right in here. Missing notches is nothing more than holes in the auctioning process, right? So if we were looking at a chart of the ES in this particular case, you know, since it's a liquid market that's actively traded, that has lots of volume, you're going to want to see it pull back to that point and refill those notches. In a lot of places, especially if it fills all those little missing notches of volume, or at least more of a depth of auctioning back down towards that area, that's actually a really good thing. Could rally off that. So I'd be keeping in mind, worst case scenario, somewhere around 12. Ideally, the first hit into that area could be a big bounce, right? Could have some, what do they call these guys, whales, jumping in, starry-eyed, hold on for dear lifers, laser eye guys. You can have them jumping in at this point. So, but just, you know, kind of know that. Who knows? We could stop and hold here, right, and go higher. But the simple fact that we've had just an absolute, what I call, crescendo day here on the 9th of May, tells us that we're holding this pattern. Somebody stepped in. It's probably just I don't know, some sort of extreme outselling and big vol. It's difficult to know that just sort of diving in further, especially since the volume on these things is questionable as far as data. The key really is to just look at it for what it is and try not to read any more into it if you can't, right? And what it is, you know, was a sort of like a mass day of selling, and then it stopped. right? That typically will hold price for some period of time. Remember, I could always be wrong with this analysis. My former boss, Mr. Crazy himself, Ken Fisher, I think he's worth about $4 billion right now, so I guess he's laughing last, right? Always said, hey, you can always be wrong. And one of the most important tools in risk management I talked about this weekend with this what's called anti-goals concept that I released is to always just pretend that you're wrong. Hey, I'm wrong in everything, And if you're wrong, you're constantly looking for places where you're wrong, right? And if I can't find any reason why I'm wrong, I'm probably right. And with that, I'll bid you guys adieu. May the trades be with you. I'll see y'all Saturday.